Hey investors, thank you so much for listening. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Confluent. So Confluent is a data company. It allows their companies to use their own data in real time to gain insights from the data, real time critical decisions, leveraging their own data and being able to integrate their data to really reach and solve customer problems. And it's really a company that is able to target many different sectors of the economy, and this is something that is very well distributed. With that in mind, it's a fast growing company, as no doubt you'll know. That being said, paying 30 times more, slightly more than 30 times forward sales for this business is probably at the high end of what I would be looking to pay. So, let's just kind of unpick here. So in the past several months, many tech names have sold off. In that light, Confluent is only down 8%. It's not a lot. It's really held its ground quite strongly. I don't have any justification why it has. It just really has. It's quite surprising, but it has. Many stocks like Cloudflare, Unity, and just countless others are down 50, 60%. It's just been an absolute carnage out there. So for Confluent only to be down 8% is really, really attractive. So Confluent's about to report their Q4 results next week. They're pointing to approximately mid-50s growth rates. Now, if you think about it, right, they're clearly growing. There's absolutely no doubt that they're growing. What's more, they're accelerating compared to the same period a year ago. So with all that in mind, it's clearly a company that's doing a lot of things right. Now, what does it actually do? So it's a technology stack, right? So it powers their customers being able to use data to drive efficiencies. So the proposition here is that as companies are moving towards a digital economy and having to gain more and more insights from their data, Confluent takes all that data from the outsides, from the fringes of the company, right to the center. And it, as I already talked about in the introduction, their customer base is quite broad. It's serving retailers, healthcare, banking, financials. It's really broad, and that allows it to kind of have not only a smoother revenue growth line, it also gives them less noise from quarter to quarter. So there's a lot here to like about the company, right? One of the things that I should highlight, though, is you can see here the Confluent platform, PCS, that's like post contract support, makes up approximately 52% of the overall subscription line. So when everyone's talking about, oh, Confluent is such a high growth business, yes, but remember that within the subscription line, which is what everyone's paying for, 50% is from the support line. Now, the support line is support, maintenance, and upgrades. So this is a low margin revenue stream. Okay, that's what you got to keep in mind. So everyone's talking about Confluent, the cloud, and this and that, but yes, the cloud is up 245% year over year. But as you can see here in gray on the left side, it makes up less than 30% of the total subscription revenues. Now you could make the case, which is a fair case, that this is growing rapidly, and when they report in Q4 next week, this is going to account for maybe 35 to 40% of the total subscription revenues. Okay. Now, if we assume the Confluence Cloud segment continues to grow at triple digits throughout 2022, this implies that this time next year, the Confluence Cloud will be a needle-moving revenue stream, but there's still a lot of execution risk ahead. Okay, so you gotta think about odds in investing. It's not good enough for everyone to kind of expect good things. If everyone's pricing in good things, then you kind of leave it left in a bit of a problem. Now, a few months ago, when I was talking to people and saying, Confluent doesn't make a lot in terms of profitability, people were just dismissing that. This time around, I think that the investors are kind of being slightly more picky right now. It's really a buyer's market, and you can be quite selective. And you can see in the screen. So Confluent is guiding for Q4 to be approximately negative 40 to 45% on a non-GAAP operating margin. Negative 40%. So yes, it is a business that's clearly growing, but if you think about it from a rule of 40 perspective, the rule of 40 reaches approximately 20%. So their ability to grow and prudently look towards the bottom line is really non-existent. So are you going to pay a premium for a stock that doesn't even reach 30% on the rule of 40? Probably not. However, as it stands right now, investors are actually expecting it a lot of pricing in a lot of expectations for next year. So analysts following the company expect mid-30s growth rates for 2022. Let's say the analysts are all wrong. Let's say the Confluent grows by approximately 40% year over year throughout 2022. That means that this time next year, at the end of 2022, Confluent's revenues will reach 540 million, okay? So that implies that the stock is being priced at 31 times forward sales, okay? So it's punchy, right? So you got a business that's unprofitable, you got a business that is not making any free cash flows. You got a business that's going to have to resort to the public markets to raise more debt throughout the year, okay? So is it really worthwhile paying a premium? Let's take a step back. Stocks don't trade in a vacuum. How many names out there are still priced at above 25 times forward sales? So it's difficult. There are a few names, there are a few infrastructure names that are priced like that, but not many. So one of the names that I kind of want to highlight is Snowflake. Now, Snowflake, the bears and bulls on two sides of the equation. I don't have any stock in Snowflake, so I think I can be quite objective talking about this, right? So in the case of Snowflake, it's truly an infrastructure platform. What that means is that as more and more companies upload their data to Snowflake to gather insights, they're able to, Snowflake is economies of scale, and it has a strong network effect because the more data that's uploaded, the more data that can be used from the companies uploading the data. That is not the same here with Confluent. Confluent is not like that. It's more really of a software application platform than it is an infrastructure platform. It might sound kind of like the same, but it's not. That there's a huge difference. One has a moat, and one, you have a lot of customer adoption, but you're not able to leverage each customer's data to make it a more responsive platform. So kind of, paying such a high multiple for a Confluent kind of leaves you a bit doesn't leave you a lot of margin of safety. Now, the other thing that I want to highlight is that if you're looking at a business that is substantially unprofitable and you're paying a very large premium, it just doesn't leave you any wiggle room. And as more and more companies look for ways to leverage their data, they will continue to migrate towards Confluent. And I didn't highlight here, but the number of customers adopting Confluent is more than 170% year-over-year increase. So they're really, really growing in terms of customers. And I've often said that, follow the customer, because the customer is really telling you what works for them and what doesn't. So that's often more insightful than thinking about the company's valuation. On the other side of the equation, nothing is in a vacuum, right? You can take off different points of views, and you can kind of think, okay, so is it really worthwhile paying a premium for an unprofitable company when the rest of the market can get some really high quality, disruptive, innovative companies priced at approximately 20 times forward sales? Doesn't make a lot of sense to me. But anyway, if you want to find out what kind of names do make sense to me right now, don't forget to check out our marketplace. Come over to Seeking Alpha and look for my marketplace. It's called Deep Value Returns. I help you by providing you with high quality investment ideas. Thank you so much for listening. Good luck throughout the earnings season. See you soon. Bye-bye.